Okay, so we are moving on to our last chapter, essentially, that we're covering in the payroll book, which is Chapter 6 on payroll registers and journalizing payroll, and how do we get everything that we're doing from the payroll registers and into the actual financial statements and get them recorded. So we're going to be working with the registers and the earnings records. Number 3, we're going to be journalizing the entries. Obviously, after you journalize, this was probably just a super quick review, but after you journalize, if you recall Accounting 1, what do you do next? You post to the general ledger. And then we're also going to be doing some accounting for accruals, end of period adjustments. Anybody remember what an accrual is? Where you have to get the expenses in the period they belong to, right? So say y'all work for me. Actually, we're almost at the end of the month, right? What's today, the 29th? So say y'all are working for me. I only pay every other week, and I'm not paying until Friday. 2 weeks worth of wages. Do those wages really belong in April? No, because you earned them and I incurred that expense in March. So I need to do an end of period adjustment or accrual to get your wages into March so that when I run financial statements, I'm matching the expenses with the revenues. Does this sound familiar? Good. Okay, so you know all this. We've done all this. How have you manually done a payroll register? In what project? Yeah, that's the continuing problem, right? Where you're filling out all the employees in that long sheet, okay? How did you get the data into a payroll register in the CLGL project? Did you actually do a payroll register? Yeah, I think you just went in and entered the hours and said, calculate taxes, didn't you? And it did it all, right? So obviously a heck of a lot simpler in a computerized system. Now, have you had any experience with these? Have you seen this before, employee earnings records? I don't think you have. That's taking all the information from the payroll register, which a payroll register is per pay period, and putting it into each individual person's ledger, for lack of a better term. So that at the end of the year, I know exactly how much Amber's made, so I can do what? Yeah, 2. I can issue her W-2s, right? So really, in the computerized project, it's just happening all behind the scenes. Obviously, each of our employees has got an employee earnings record. In the real world, when you were done with that big monster payroll register, you'd have a box full of cards with each employee's names on it, and you would repost all that data to the employee earnings records. Okay, that's what we did in old school. Obviously, everything's pretty much computerized now. And then you've got to get everything into your financial statements through the general journal. So you have to journalize the gross wages, you have to journalize payroll taxes, and then you have to journalize your period and accruals. And that's what we're really going to focus on today. And then you've got to get it to the general ledger. So I'm not going to spend a whole ton of time on this because we've done these. You should be familiar with these. What we just worked through in our CPP, we've listed all of our employees in rows, and then here's the column headings, right? So you've got your gross wages, each of your taxes, right? What if you had weird deductions, like, I don't know, garnished wages or something, or you were putting money into a health savings account? Do you have a column for each deduction separate, or can you mush them together? You have to really keep them and track them and reconcile them all separately. So your payroll registers, if you're in a complex company with a lot of different kinds of withholdings and things going on, could be pretty monstrous. You could have a lot of different kinds of fields. And then when you complete your payroll register, and make sure that you do this on your CPP, For those of you that are listening online, you don't have a CPP, so don't worry that you've missed something. That's a little treat only for the in-class people. But you have to make sure to foot and cross foot. And what do I mean by that? When you total your numbers up, right? These are all the individual columns. That's called footing, right? So I'm footing these. In other words, I'm totaling them all up. When they come out to that final column all the way here on the right, net pay, all of your totals here have to equal what? Your totals for this column here have to equal, because this is gross, right, minus all the withholdings. Are you with me? So if you take all these numbers, gross minus all the withholdings, they have to come to this, and that's called cross-footing. Footing and cross-footing. And in the old days, before we had spreadsheets, there were whole rooms of people working in companies, but that's what you did. That was my illustrious beginning in accounting. When I was 16, I worked for a Servo Nation in Chicago, which did vending machine food. And they had a bunch of different channels around the Midwest, and you would have to foot and cross foot and make sure that everything balanced out. So when they say that, you have to ensure that your columns and rows all total to that bottom right-hand number. Okay, and then and only then are you ready to journalize, because until you've proven that your payroll register foots and cross foots, you can't jump into your journal and start journalizing, because it might not balance. Okay, and then as I said, then you're going to transfer everything to the employee's earnings record, and the key here is that you need to know cumulative totals as you go on down the road for each employee. How come? Why is that so critical that I know from payroll to payroll where you're at? Yeah, what if there's CAP or FUTA or SUTA or OASDI or anything? So I need to be aware of that. Okay, I've got to be aware of the different wage caps. And then you're really coming to the point where you're trying to get the information into the accounting system. Okay, I'd like to just back up for a couple seconds and do a quick debit credit review, because everybody here has had to have been through accounting 1. Have you all been through accounting 2 as well? Yeah, okay. Not you. Yeah, you're in it right now. You don't need to have been through accounting 2 to do this, believe me. But I just want to make sure that everybody kind of does just a little refresher on debits and credits and account types. So, first off, when you set up a general journal, what are your columns? If you were just setting one up, date, yep. Yep, reference number, which is you use to do what? Yeah, post, and then what are your last 2 columns? Debit and credit, right? So what's the first thing, if you were telling somebody what a double entry accounting system looked like, what's the first thing that you would tell them that they always have to make sure of after they do a journal entry? Huh? Yeah. Item number 1, your debits have to equal your credits, right? So when you do journal entries for me, particularly in an exam situation, do not give me something that doesn't balance. That is just a slam dunk thing to do to check your own work. Secondly, and I don't know where this comes from, but do you total journal entries? Do I have little subtotals on them? No, you just make the journal entry, make sure the debits equal the credits. You don't show me the work, right? That's just something that you do as a double check. Okay, so what's this? A T account. And which side does the plus go on? It depends. What does it depend on? whether it's a debit type account or a credit type account. So let's just go through and do, because we don't use very many accounts in journalizing payroll, so let's just go through the ones that we do and make sure that we're 100% clear on what kinds of accounts they are. Debit or credit type account? Debits are always on the left, credits are always on the right, right? Anything with the word expense in it, payroll tax expense, payroll expense, salary expense, wage expense, right? All debits. Yeah? And that ends up on what financial statement? Where do your revenues and expenses end up? On your P&L, right, or your income statement. What about OASDI payable? What type of account is that? It is a liability account, so it's got what kind of balance? Credit. Anytime you see the word, what does that say to you? It's a liability. Every single column of withholdings is a liability. OASDI payable, union dues payable, HSA payable, group insurance premiums payable, garnishments payable. Anything I take out of your paycheck has to go to a payable account, because otherwise I shouldn't be taking it out of your check. If I take it out of your check, it's because I owe it to somebody else on your behalf. Okay? Debit or credit type account? Because it's an asset. So if I'm decreasing cash, I'm doing what? Debiting or crediting it? Crediting it. And if I'm bringing cash in, I debit it, right? If I want to increase the amount in my payable account, do I debit or credit it? Credit it. If I pay down my liability, I debit it. Okay. That is like literally the only kinds of accounts we're going to be using. Expenses, payables, and cash, essentially. Okay. So, easy peasy, right? Oops. And this is basically what I just said. How do you get this information into the accounting system? You debit the amount of gross payroll. What do you debit the amount of gross payroll to? Which account? Wages expense. We're going to debit it to wages expense. We want it to go to the profit and loss and reduce our revenue, right? Each withholding tax is credited to a liability. I gave you an example of one account in the last screen, OASDI payable. What else are you going to use? HI payable? FIT payable? SIP payable? Do I take food and SUTA from your check? No, those aren't withholdings, are they? Those are employer taxes, right? So, and then pardon me. All my other payroll deductions are also liabilities, and I just gave you some examples of those, like what? Yeah, insurance payable. Like my employer takes money out of my paycheck to help pay my insurance premiums. So when they take out that $90 a paycheck or whatever it is, it goes into an account called health insurance payable, right? Okay. No, that's a really good question. What's the difference? The question was, for those of you that are listening, What's the difference between these two accounts? Go ahead, I'm listening.
That's the account which you can use for other things like travel.
That's flex. HSAs are taken out of my paycheck if my employer has got a high deductible plan. What's a high deductible plan? Anybody remember that? No, not that much. Thank God. How much?
35?
It's like $3,300 if you're single and $6,600 if you're a family. So if your employer has a plan in place where your premium or where your deductible is $3,300, and that's not the exact number, but it's around there. $3,300 if you're single, about $6,600 if you're a family. Then you can do what? If you've got a high deductible plan, you can take money out of your paycheck and put it into one of these to use to pay your out-of-pocket health costs, health savings accounts. The difference between the health savings account and the flex account is that these roll over from year to year, don't they? It's not a use it or lose it. And if you put money into these, say, your whole life and you don't ever use the whole thing up, when you turn 59 and a half, you can convert it to a IRA. Okay. And this is pre-tax. Pre-what taxes? Do you get out from underneath all your taxes on an HSA? Spit and sit. Very good. Versus health insurance payable is what? It's not an expense because it's got the word payable, so it's liability, but I'm asking, what is that? Why would I have that account and an HSA payable account?
Like workers' comp.
No.
So the health insurance payable is for insurance that you get through your job.
It's for my share of the premiums. So what I'm saying, just stick with me here. This whole area around health insurance is getting, it's a pretty complicated piece of payroll. So in my husband's company, for example, this is what they've done. He's the controller for the youth homes, and they're to keep their health insurance costs manageable. They're a nonprofit, obviously. They've had to go to a high deductible plan. So they set up an HSA that allows their social workers and their youth home directors to defer part of that money into a health savings account to meet their out-of-pocket costs, number one. Number two, they'll pay for the premiums for the employee, but what if you wanted to put on your kids or your husband? Are they paying for that? Probably. No. Barely anybody does that anymore. So in that case, you've got to pay out of your paycheck part of the premiums, don't you? So these are the health insurance premiums. That's different from a health savings account that's just basically a pre-tax savings account to pay your out-of-pocket costs. So you can have a ton of different kinds of payable accounts, is what I'm saying. Okay, any deduction that the employer makes from an employee's paycheck goes into a liability account. Health insurance premiums, life insurance premiums. I don't know if anybody really buys government savings bonds, but if they did, that would be a union dues, right? They take, I don't know, gosh, I think I paid a lot, $59 a month or something in union dues, right? They take that out of my paycheck, it goes into union dues payable. If you have a wage garnishment, we're going to talk about those in a second. They take it out of the check, they've got to submit it to whoever you owe the money to, right? Or pension and retirement contributions. I want to put extra money into my 403B every month. That's a payable account. So anything they hold out, and if you're sitting there wondering, oh my gosh, what's the title of the account? Just take whatever it is and put this on the end. Right? They're liabilities. Just say what it is and slap the word payable on the end and make sure that you know it's a credit type account and that it's a liability. Okay, garnishments. A garnishment is when a creditor goes to the courthouse or the court system and says, I'm not having any luck getting my money out of this person that owes me money. And you've got to have some sort of contractual relationship with them, a note or an invoice or a purchase order, something that shows they owe you the money and they're not paying you. So if the courts find in your favor, they're going to actually send a notice to the employer. Most garnishments are around what in this country? Yeah, child support and medical bills. I mean, I'm sure Verizon's a close third. Right? So they garnish your wages to get their money. The employer, when they go out to their mailbox and they get their mail and there's a notice from Missoula County Court, they get a garnishment order, they have to comply with it. It's not like, oh God, I don't know what to do with this. It's like you've got to comply with it. You've got to have a payroll system set up to actually take the money out of the paychecks and make sure that it gets to the appropriate authorities. So depending upon what state you live in and what kind of garnishment it is, will dictate what percentage of your take-home pay can be garnished. So basically, it's limited by the Consumer Credit Protection Act. And here's the order. This is not a good situation if you have multiple garnishments. Then they become prioritized. So who's got the first shot at your money? Chapter 13 bankruptcy orders. Then if you have federal tax, you have a federal tax lien or levy, L-I-E-N, a lien or a levy, that and or child support are going to be the next priority depending upon the situation. And then just all your other general creditors. Okay, if you've already got bankruptcy and federal tax levies and child support liens, you're just Joe creditor is not going to probably get any money out of you because there's only so much in the stone, right? You can only bleed it so much. And student loans are in there as well. Okay, so child support, high priority, obviously. Family Support Act requires immediate withholding. Does anybody remember, this was from way back, like in, I don't know, chapter 1 or 2, what act mandated that all employers start now reporting their new hires? Yeah, it's a Personal Work Opportunity and Reconciliation Act. And basically most of us know it as welfare reform. Came under Bill Clinton, 1994, and it completely restructured the welfare program in this country, right? It mandated, I can't even tell you how long it is. I think it's, correct me if anybody knows, 3 or 4 years is the maximum amount of time you can be on welfare. So it can't be a decades-long thing. But one of the other things that came through that is this idea that when I go to work for somebody, that my employer's got 30 days to get my name and social security number into a central database. What does that have to do with child support? They have to get my name and social security number. They have to feed it to the Office of Child Support Enforcement in Helena. And what does Helena do with it? It all goes into a mainframe database in Washington, D.C. So that if I owe money to my ex-husband in Vermont and I start a job in Montana, it's going to cross-check it, and my wages are going to get garnished. In the old days, all you had to do was cross state lines and get a job, and you never had to pay your child support. Now, those days are gone. So, yeah, so that's basically how that works. The thing about child support garnishments is that depending upon what other kind of outstanding creditors are out there, they can take up to 50 to 65% of a person's disposable earnings. What do you think about that number? I'd like to just get your read on this. It's high. What do you think it does? I mean, I think we all agree if you owe back child support, you should get your butt kicked and get current, right? Obviously, everybody, that's a pretty unilateral statement. What's the problem with this number, though? What happens? What would happen to your average Joe or Josephine if they show up to pick up their first check and they think they're going to get $680 and there's $330 sitting there? They're never showing up again. And they're going into the underground economy, right? They're getting paid under the table. They're doing odd jobs. Is that societally desirable? No, because first off, the ex-spouse or partner is never going to get any more money out of them. And B, it's not desirable to have an underground economy. People aren't covered by health insurance. They don't have savings accounts. They're not participating in a democratic above the line society. So it's not a desirable thing. Yeah. So I just wanted to point that out. So after child support, if you owe federal taxes, you are also, that's also a high priority garnishment. The way that you calculate the amount that you can take out of somebody's check for a federal tax levy is, has everybody done their taxes for this year already? Yep. So do you pay, no. Do you pay taxes on every penny that you earn? No. What does everybody get? What do you get to take right off the top? Yep. You get a standard deduction and you get an exemption. Okay. And basically, the standard deduction for this year, for 2015, is $6,300 if you're single, $12,600 if you're married. So if you make under that, you're not going to owe any income tax, are you? Plus, you get an exemption for yourself and each of your dependents. And that's good for $4,000 a pop. So if it's like you and your spouse, you get $12,600 because you're married, standard deduction. You get another $8,000 for exemptions. So your first $20,600 isn't taxed at all. So if they add those numbers together and divide it by your number of paychecks, that's how much they can't garnish a week, essentially. So, I'm not sure what this is. Oh, this is the form that when the federal tax levy has been paid off in full, the employer will get this form from the IRS and then they can stop withholding federal tax garnishments. Pension plans and retirement contributions. Can you give me a couple examples of the names of plans that somebody might be paying into for pensions and retirement contributions? 401k. What's the nonprofit equivalent of that? If you work for a nonprofit, do you pay into a 401k? It's a 403b. So that's what we have here because the university's a member, we're paid by the state of Montana. So 403bs, 401ks. What one did you use in your payroll register? Simple. And who's that for? What kinds of employers use those? Got to have less than 100 employees, small employers. So honestly, in Missoula, that's the number one thing I see are simple plans because we have so many small employers. Savings. Anybody remember what that stands for? Savings, incentive, matching plan for employees. So it's a way to incent your employees to save for their own retirement. And it's recorded in the payroll entry. So if I take money out of your paycheck for a 401k or a 403b or a simple, where do I send it? Who do I give it to? So you all work for me, you all put in $150 a month, and I match it. Where do I send it? It goes to whatever investment fund family I work with, like Prudential or T. Rowe Price, or what are some other biggies? American Funds, or, there's tens of thousands of them. I'm just naming some of the big ones. So has anybody here ever been in a pension or a retirement plan? Okay. How did you decide what to invest in?
I didn't. It was a union plan.
Oh, so you didn't have to pour through all the. Okay.
I think it was
One more time.
At least 10% of my paycheck?
At least 10% of your paycheck.
Right.
Wow. We're required here to put in 7.5% of our paycheck, and then the university, I think, puts in like 5%. So, that's pretty good. But my point is, where does that 12.5% of my gross wages go? It goes into the stock market, stock and bond market, through mutual funds. And you have to decide what you want to invest in. Do I want to do really high-risk stuff like emerging markets in Asia? Or do I want really safe funds like, savings bonds, essentially, or money markets? How do you decide what you want? These are big choices, you guys, that you'll be making in your first job. How do you decide what makes sense? One more time. Yeah, you want to do the very most that they'll match. But are you and I going to have the same investment priorities? Why not?
Because I'm not retiring.
Yeah, because I'm way older than you are. Yeah, that's okay. No, that's pretty apparent. So who's going to be taking more risk, you or I?
You, me.
Really? I'm taking zero risk. Retirement's within 10 years for me. I don't want to take any risk. That's because I've got a shorter time span to get ready for retirement, right? So as you get older, you move your stuff from the riskier stuff you're in when you're young, because you've got a big horizon out there, don't you, for things to go up and down for a long time.
You're talking about like your portfolio?
My portfolio gets way more risk averse, and you earn less money because you're not taking the risk, right? The more risk, the more return. I'm taking a lot less risk. She would take a lot more risk. And it's also tempered with what kind of person you are. I've never taken a lot of risk because I'm not really a risk-taking personality type to start with. But I took a whole bunch more 20 years ago than I do now. Okay? So what I'm just trying to get you to think about is to make it a little bit more interesting behind just this raw journalizing what's really going on. Okay. I don't think we need to go through this, but basically they're saying, how do you get your wages? You usually either get a check or you get an EFTS. Okay. How many people here are paid electronically? Yeah, most everybody. Yeah. And then they're just making the point here with final pay that it depends upon which state you live in, how many hours between being terminated and getting your final paycheck is required by state law. And I think it says Michigan and California, when you're letting somebody go, you've got to have their check right there to give to them as they walk out the door. In Montana, I believe it's 48 hours. Some states, whenever you're running the next payroll, so there's a pretty wide variety. Do you think it's different?
It might be a week or what?
Is it?
I got let off
Okay.
4 years ago.
Okay. Is it a week?
I could be wrong.
Okay, so let's try some journalizing. So go ahead, set up a general journal in your notebook, please. Like we just practiced. So, and you don't need a reference column. All we need is date, description, debit, and credit. In the first journal entry, so let me just back up a second. So anytime you run a payroll, whether it's a gigantic multi-million-dollar payroll or one paycheck for one person, you've got to make 2 journal entries. The first journal entry is for the payroll itself. The second journal entry is for the employer's payroll taxes. Okay, so we've always got those 2 journal entries. Journal entry number 1, what we've just been going over, you record the gross wages. And what account is that going to again? Wage expense. Each of the withholdings, as we just established, has its own account. And what kind of accounts are those again? Payables. And then the net pay is the amount you're writing the checks for. So that goes to what account? Cash, right? Pretty straightforward. Journal entry number 2 is for the employer's payroll tax expense. So for this, you're going to debit payroll tax expense and credit each of the employer taxes payable. And what are the 4 employer taxes again? FUTA, SUTA, OASDI, and HI. FUTA, SUTA, OASDI, and HI. Okay? These 2 journal entries are always the same. You must make both of them every time you issue a paycheck, even if you're just cutting a little tiny check for 1 day's wages or running a $5 million payroll. Okay, so here's my payroll for 2 employees, employee A and employee B. And here I footed and cross-footed, and you don't have to check the numbers because I've ascertained that those are correct, but that would always be the first thing that you did. So you've got your journal in front of you. Go ahead and journalize the payroll. You know what my gross wages are. You see that I've got 5 different kinds of withholdings, and you've got net pay. So what am I debiting? Yep, to which account? Yep. And then everything else is a credit. Then just to prove to yourself, make sure to run a calculator over it. So it's pretty straightforward. And I don't care if your account titles don't look like mine. You can just say OASDI payable, HI payable, FIP payable, SIP payable. And then here, for whatever reason, the book calls it employee premiums, payments, withholding. I would just call it, insurance payable or health insurance payable. I guess you don't even know that. But the point being is that, just to reinforce, wage expense is going to which financial statement again? Income statement or P&L. All of these payables are going to show up where? On your balance sheet as what? As liabilities until you pay them, right? Until you make your deposits or pay the insurance company or whatever. And then cash, of course, that's the sum total of your paychecks. That's going to cross your bank rack. So that's the first journal entry. It always looks the same. Nothing creative. Everyone get that? Second journal entry is for what again? Employer's taxes. So for that journal entry, you're going to debit payroll tax expense for the total of all the amount that the employer's got to pay. And then you're going to credit each account, FUTA payable, SUTA payable, OASDI payable, and HI payable. So here's my two employees again. But of course, when you get to employer taxes, you've got to worry about what have they capped for what. I've got to give you some indication of those numbers, don't I? How much have they earned before today and what's the cap? Or in this case, I'm telling you, obviously A has already capped for FUTA. And only $800 of her wages are susceptible to SUTA. All of wages susceptible to OASDI and, of course, HI. B is capping this time for FUTA. All is susceptible to SUTA, OASDI, and HI. So what I did here was I actually gave you the amounts, but would I need to give you the amounts? I really only have to give you 1%. Which one do I have to tell you? The percentages for the taxes. Only SUTA, because you know FUTA, and you know OASDI, and you know HI. So I tell you where they cap, and the only percentage I have to give you is SUTA. Can you make this journal entry now? And I would jump down the line and do all your credits first, and then add them up and do your debit to payroll tax expense. Yes, providing they paid on time. Sorry? And aren't in the Title 12 default state. I would have to tell you all that because you would have no way of knowing that. I'll probably keep it pretty straightforward. I'm mostly just concerned you can get these payroll registers into general journal format. So go ahead, make your journal your second journal entry. So I always, when I do this, I jump ahead and do the 4 payables and then add them up to make the debit to payroll tax expense. Okay, so I've run my payroll. I've made my 2 journal entries. And you guys did all this on the CLGL. What do you have to worry about now? run the paychecks, you've journalized them. You've got to post to the general ledger, absolutely. And in the software, all we did was just hit a post, didn't we? Don't you have to pay these taxes, deposit them? Well, can you say that as a blanket statement? I don't think you can. There's all sorts of different taxes up there, aren't they? So look back at the first journal entry for the employees. What do you deposit together out of there? Yeah, FICA. What do we always practice saying? FICA, FIT. That's called my what deposit? Yeah, that's my 941 deposit. Okay, can you make that? And do not forget, you've got to pick up both sections of FICA. And you've got them between two accounts. So how many debits am I going to have? 3. I've got to debit 3 accounts, don't I? So do that, then make my 940. Well, what's the rules with 940? Yeah, so am I going to make that right now? I mean, I guess you don't have enough information, because if this sent you over 500, you'd have to make it, but let's just pretend it did. How about SIT? Have we learned the rules for SIT or SUTA? I don't think we have, so I'm going to tell you that, and then I'm going to ask you to make all of the deposits that you think you should make. So SUTA is only deposited quarterly. Doesn't matter how big or how little. I'm not going to tell you the intricacies of the rules here, because we're going to study that when we get to the Montana section, but generally, it's the same as the 941 schedule. And how do you know what your 941 schedule is? Is it? Everyone's quarterly? It depends. They tell you. They tell you that you're either what or what? Monthly or semi-weekly, exactly. Okay. So, and this is also called semi-weekly, is also called accelerated. So in this example, my company is a semi-weekly depositor. And the payroll was run on Tuesday, October 11th. Make all the deposits you think you need to make. Journalize all the deposits. My payroll was run on Tuesday, October 11th. They're a semi-weekly depositor. Make all of the deposits that you think you need to make. And you put them in separate journal entries. Don't try to put them all in one. Okay? You understand? So, if I made it, the payroll on October 11th, what date am I on for the deposit? Saturday through Tuesday is the next what? Friday, right? 14th? Make the deposit on the 14th? If I'm semi-weekly, and you run a payroll on a Saturday through a Tuesday, you have to deposit by Friday. And this was Tuesday the 11th. So this is by Friday the 14th. Did everybody catch that you had to pick up the OASDI from both the employee and the employer? Yeah? And we've said it all class period, right? FICA, FIT. So you've got to make sure and go pick it up from both places. I will just tell you, you're all sitting and smiling and nodding, and half of you will come into the test and miss it. So just make a mental check mark in your mind. When you make a 941 deposit, you know you've got to deposit both shares. So you can't just go pick up one number. But don't. You're not doubling this. The employer's not paying FIT, right? Because we know that OASDI and HI are the only taxes that are paid by both parties. Okay? Then, piece of cake to deposit set, you just go pick the number up, right? So what balance are in these payable accounts after I make my deposits? They're semi-weekly, which basically means they need to deposit after every payroll, doesn't it? Or they've got 3 business days. Yeah, your balance will be 0. These are the kinds of things I'm going to ask you. I want you to kind of, so that you I know that you understand what's going on. You're exactly right. If they were, for example, a monthly depositor, or really tiny, or really tiny, I couldn't ask you that question because you don't have enough information. There maybe still would be a balance in there. Okay, and then really, would you deposit FUTA or SUTA right now? I don't think so. I think I put up here the FUTA deposit just to illustrate it, but I mean, you wouldn't be depositing. You only deposit SUTA quarterly. You only deposit FUTA when you get to how much? 500. Did everybody get that? I've still got a couple of people kind of looking puzzled. Do these numbers tie to what y'all have? Okay. Workers' comp. What is workers' comp? Not from being laid off, it's from injury. It looks a lot like a payroll tax, but it's really an insurance premium. Who pays it? Employer. In no situation does the employee ever have to kick in a workers' comp. Is it mandatory or elective? Mandatory. Every employer, and I can tell you, you will get shut down so stinking fast if you do not have a workers' comp policy that's validated. You'll get yellow taped and lockboxed, and your business will be shut down like that. Yep. Independent contractors, we're going to study that in the Montana section, but that's a really good question. If you're just a standalone, like, you're a landscaper, you can elect not to have it on yourself. But if you've got a crew, you've always got to pay for them. But you can waive yourself from workers' comp. I mean, I've got I've got a number of tax clients that do that. And it's usually folks that are really struggling to pay their bills. But it also just, usually so happens to be in the higher risk. I'm a drywaller, or I'm a roofer, or it's the exact kinds of things that you should be covering yourself on because there's a high risk factor. Okay, so how do you think this is going to show up in your financial statements or in your journals? It's going to be workers' comp payable, probably. And what's the debit side of it going to be? It's going to be an expense to the employer. So pretty straightforward. It's an expense for the employer. They're required to purchase the insurance. And we're going to do a unit on this in Montana, so I won't go too far into it. But it's to cover you if you're injured. It's to retrain you, and it's to pay your medical bills. And the laws are different in every state, but it's mandatory in all 50 states. And different kinds of jobs have different rates. So you can imagine if you're a log liner, you've got a way different rate than if you're me. I mean, how am I going to get injured on the job other than tripping over these wires, So they don't have to pay very much workers' comp on me, but the men and women that run the facilities, they've got pretty high workers' comp. They work around hazardous chemicals. They work around, small engines, all sorts of stuff. So what's weird about workers' comp, and we're going to spend a little bit more time on this, like I said, when we get to the unit, is you pay your premiums based on an estimate. So say I'm going into business. Say I'm starting a bridal shop, and I'm going to ask you guys to all come work for me. And so I estimate your wages for the first year. I mean, you're going to be consultants, and you're going to be salesmen, and you're going to actually be, sewing the dresses, and you're going to do the marketing, and you're going to do the books. So you've all got different wage levels and different risk levels, although nothing's going to be too terribly high risk in retail, probably. So I estimate what I'm going to pay you for the first year, and then I send it into state fund, and I get an estimate from them, and I have to pay it in advance. And then after a year goes by, I have to tell them what I actually paid you. Do you think that's going to be the same? I mean, it never is. So then I get even with them, or I've got a credit going into the next year. So it really is a little bit more complicated than it's showing it here, but basically that's how it works. One more time.
You're rolling over employees all the time, like,
Yeah.
they do that once a year.
It depends upon the size of the company. Some companies do it quarterly. And overtime isn't included in your estimates, and then all of a sudden you start paying a ton of overtime. And I mean, I will tell you, when I was actually actively a controller, pre-academia, this is something that you're susceptible to many more audits than you are like tax audits or payroll tax audits. As the workers' comp comes in and audits you, and that was California and Colorado. It wasn't even here. So they stay on top of audits for that. Okay, last thing, and then we'll call it a day, and I'll send you on your way to get your homework done for Thursday. The end of period adjustments, again, are for, well, you tell me, what did I just tell you those were for at the beginning of class? I gave you the example that you'd work for me for a couple weeks, but I'm not going to pay you until April. Yeah, but I have to, what's the word? It's a accrual. Okay. Gold star to anybody that can spell it. Accrual. Okay. So I've got to accrue for anything where I want the expense to be in the current month, even though I might not be paying it till later. Does this ring a bell with the accounting one? You guys are like,
It's been a while.
So, for example, and they're called, it's a, what does this mean? Oops. What's an AJE? Adjusting journal entry. Yep, adjusting journal entry. So, for example, y'all work for me, you've earned $2,400 at the end of December, but I'm not going to pay it until January. So I need to accrue wages at year end. I need to make an AJE, a year-end AJE. That's all it's going to look like. Why did I do this again? I want it to show up in my December financial statements, even though I'm paying it in January. So when you make an accrual entry like this, what do you do when you actually pay the wages then? It's not really a reversal because I'm not going to go back and credit expense, am I? Okay, so what am I going to debit? What am I going to credit when I actually pay them? Debit wages payable and credit cash. I never touch this again, do I? Because I got that in the period it belongs to. Okay, what else do we have to accrue for? Any sort of PTO. What does that mean? What's PTO? Yeah, paid time off or personal time off. Vacation pay, sick pay, those are the biggies. Although a lot of companies now are just going to straight PTO, and you don't need to tell them I'm going on holiday or I'm sick or I need a day to go sign my mortgage, or it's just X amount of PTO, right? It's easier to track, but also it ends up saving the employer money because when you leave, PTO, depending upon how it's set up, may or may not need to be paid out. Whereas by law, accrued holiday pay or vacation pay and accrued sick pay does have to be paid out. So it's kind of a way of getting out from underneath that liability. But anyways, just to take this home, can you make the year-end accrual for vacation, please? Based on what we just learned about wages. I've got, you guys have all earned, and I keep a spreadsheet, how many hours each of you earn a month or a year, whatever pay period. And there's $1,000 of accrued pay, vacation pay, that needs to be utilized. I don't know why it says 2 years. That's way too long. In the next 6 months. Make the journal entry to accrue the vacation pay. What are you going to do? Sure. Vacation pay expense or PTO expense. What are you going to credit? PTO payable. So that when you go and run a paycheck and somebody puts in a time card where they had 8 hours of PTO and 32 hours of regular wages, what are you going to do then? Some of it's going to be wage expense for that period. Some of it's going to be debiting PTO payable and crediting cash. Very good, because they're not earning more wages then, are they? They've accrued PTO in the past, and they're just using it now. Okay, what time we have? Okay. Is that the last one? Oh, yay. Perfect. All right, let's call it good.